Well, in business news, the Finance Act 2023 is the fourth in a series of legislative amendments to be enacted by the federal government on an annual time frame. The passage of the act reinforces FG's commitment to making incremental changes to Nigeria's fiscal framework that continues to be pivotal in achieving economic growth and sustainable development imperatives. The changes introduced by the Act are intended to improve tax revenue, allowing changes in the prior Act to ensure tax equity and consistency, reform tax incentive regime for companies, and improve tax administration. The commencement date was reviewed by President Bola Tinubu. Managing consultant Pedabo Professional Services, Mr. Albert Folorunsho, gave an in-depth analysis on the implications of the change in date and what it means for businesses.
Were made particularly to value-added tax. It was also made to company income tax and, of course, capital gains tax. Lucky enough, the FRS has been very proactive in this manner, and a recent circular of news was issued by the Federal Revenue to guide taxpayer as to how these provisions will be implemented in view of the deferment of the implementation. Again, talking about that deferment, it was good that the president did that so that taxpayers will get familiar with the provision of the law, and that was why he gave us 3 months for the implementation to commence today. And of course, businesses have carried out their transaction in 2022 up to now, and so they will not be impacted so much by the provision of this particular finance that is being implemented.
The National Bureau of Statistics in its labor force survey report for Q4 2022 and Q1 2023 says Nigeria's unemployment rate stood at 5.3% for the fourth quarter of 2022 and 4.1% in the third quarter of 2023. It is in this light to reduce further youth unemployment that business experts and CEOs and entrepreneurs gathered in Lagos to foster collaboration, share knowledge, profile solutions, and chart a way forward to curb growing rate of unemployment by engaging young people in skills acquisition, mentorship, and training to create more jobs in the economy. Speakers at the roundtable discuss say white-collar jobs are no longer sustainable for the survival of young people, while urging government and private sector players to provide basic infrastructure and support system for young people to thrive.
The job that exists in our society today has very little to do with white-collar jobs. We are at the point where we need to build physical infrastructure to support our growth. We are at the point where we need to build roads and build houses. And at that point, no, you're not going to wear a tie and a suit and expect that you will solve the society's problem. And why we are importing labor from neighboring countries? Because some of our young people who could be on these jobs have not been trained for that. We have a better chance for creating jobs today in agriculture, in food processing, in construction, in real estate than we do in providing jobs in banking. How many people can we have? So we must retune our educational system to focus on the areas where the opportunities exist and create those jobs.
People see value and could point to success stories in the white-collar space. So you cannot be angry or sad that people are interested to play in that space. But we've seen now that there's an oversaturation in that space, all right? And because people are not finding their desired opportunity in the white-collar space, they now tend to tag themselves as unemployed, all right? And then do other things to survive. Now, they call that survival, but is it really survival if it is contributing to the economy? Is it survival if you're making money out of it?
I think that there's so much that can be done by both private, public, and even non-governmental to look inwards as to what amongst their existing programs supports the growth and development of young people, and how can they provide soft landing for young people who are eager to learn and make meaningful contribution to the economy.
The stock market closed the week in red following losses accumulated by some big firms. Market editor Ifyong Ekop has details.
The stock market slided to negative territories and brought weekend trades to lower levels. This came on the back of losses by investors and companies due to falling securities prices. Market index dipped by 0.06%, stressing downward prices on securities. Prestige Assurance was the biggest business loser as sales pressure hit hard on its shares. Other losers were GlaxoSmithKline, Honeywell Flour, Champion Breweries, and May & Baker. The lines of deals gainers were swelled by Dangote Sugar and other light-weighted firms. 494 million units of shares traded with the value of 6.8 billion naira. Effiong Ekop TVC News, Lagos.
Asian shares edged higher today as China stepped up efforts to support its housing sector and stabilize the yuan, though investors remain cautious ahead of U.S. job data that could make or mar the case of further rate hikes. MSCI's broadest index of Asian Pacific shares outside Japan rose 0.18% and was up 0.34%. That's Nikkei. China's benchmark was up 0.59%. Real estate gauge narrowed earlier, gained 0.40%. Hong Kong cash stock market was closed for the day as Super Typhoon Solar approached southern China, but Hang Seng index rose 0.3%. European Central Bank Eurozone's inflation remains unchanged at 5.3% according to the central bank. In the past 13 months, the ECB has consistently raised interest rates in an effort to keep inflation in check. Analysts expect the bank might now consider pausing the policy with a visible slowdown in economic growth. EU Statistics Agency Eurostat in July said inflation in 20 nations fell to 5.3%, down almost a percentage point from the previous month. The consumer price index for the Eurozone was supported by a 9.8% price increase in food, alcohol, and tobacco prices in August. The Malaysian government today unveiled a new master plan to increase the country's industrial output to 587.5 billion ringgit, that's about $126 billion by 2030, while also increasing employment rate. Now, Prime Minister Andrew Brahim, in his speech at the launch of the event, said that the new master plan will result in growth of 2.3% of this year's onward and provide employment to 3.3 people by 2030. He said NIMP is designed to drive Malaysia's trajectory as a global leader in industrial development, extend the domestic linkages to create wealth across the nation, as well as strengthen position of in the global value chain. Mr. Ibrahim added that with limited time window, Malaysia seeks to accelerate the pace towards digitalization and new technology, towards moving towards net zero carbon emission and creating an enabling environment that ensures supply chain security. Australia's Competition and Consumer Commission is asking court to fine Qantas Airlines hundreds of millions of dollars a day after suing the carrier for allegedly selling tickets to thousands of customers after flights were cancelled. ACC said that the airline broke consumer law when it sold tickets to more than 8,000 flights between May and July 2022 without disclosing that they had been cancelled. Qantas said it would examine the allegations and respond in court, but argued the period in question during the pandemic was a time of unprecedented upheaval across the global airline industry.